Welcome to Tony at 12. I'm Tony LeBlanc, and today I'm in conversation with Toby Birch, who is a senior investment manager at Gower Financial Services. We're going to take a look at what has been happening in the world of finance during the second quarter of 2022. Toby, good to see you as ever.
And you, so come around quickly as usual.
Oh, isn't it frightening? I mean, it just absolutely rolls by so quickly, the time, but there we are. Need to just make the point that all opinions are personal and no investment advice is being given. We always have to put that little disclaimer in, don't we? But awesome. There we are. Review over the last 3 months, been a bit, up and down and up and down and down.
yeah, I think it's down, deeper on down.
Status quo.
Exactly. It's been it's not just a tough 3 months. The first half of the year has been the worst in my memory, and according to official stats, I think it's the worst since either 1970 or 1962, depending on who you ask. The only other episodes which have been as rough, I think 1932 in the Great Depression and 1962. But I'm not sure what's happening in 62. It's a bit before I was born, but yeah, it was
Oh, there was some crisis of some sort. I mean, it's always triggered by a crisis. But looking at the indices over the last 3 months, the FTSE, when we spoke, back in March, it was at 7516. It's now down to 7120. The Dow was 34678, now down to 30463, and the Nikkei 27821 down to 26384. So you've got that pattern, similar amounts, right, percentage-wise.
Yeah, I mean, there's a bit more to it than just the headline numbers. I mean, the S&P 500, which is the most representative US index, at one stage, which only about a few weeks back, was down 23% over the whole year. And the FTSE's been quite a good performance. It stayed relatively stable until recently. And in Japan, okay, you might have lost 5%, but the actual yen itself is at a 24-year low. They keep on printing money and issuing more and more bonds, which the US and UK are kind of trying to put a halt to at the moment, but it's very addictive.
Are we also seeing the effects of quantitative easing?
Well, we've now got the opposite going on with quantitative tightening. So the American Central Bank has officially stopped buying bonds to inject liquidity. But again, it's all these ideas of putting up interest rates to stop inflation. It would have worked in the past, but this time round, it's not about demand or people going on a spending spree. It's about the lack of supply, which is pushing up prices, as we know. So it's a very blunt instrument, and that's all they've got. It's a bit like whack-a-mole, kind of smashing down on anything that moves. But there's the consequences to this, and people aren't in the mood for having their more expensive mortgages right now.
Although in terms of expensive mortgages, compared with what they were when I used to have a mortgage, 15% in the 80s and things like that, not quite so bad. But I suppose part of the problem there, Toby, is the fact that the lenders have been very lenient over the last few years with cheap interest rates, and that's where it's going to bite, isn't it? So whilst an increase of say 0.5% doesn't on the face of it make much of a difference, if they've sort of overlent in the first place,
it's just the loans are so enormous, because to afford these properties for youngsters, they've got to take out blistering multiples. So every little percentage is crucifying. And okay, we've got a lot of fixed deals out there still, but they'll start to mature in the next 2-3 years. So it's storing up a lot of pain for a lot of people, particularly again younger generation who can't really afford to do anything.
Yeah, that's right. So question is, Toby, are we actually in a bear market at the present time?
Yeah, we've kind of been there. In terms of the States, we've already had the official definition of minus 20%. So we've had that, and the market's starting to rally, thank goodness, over the last week. But these are kind of emotive terms, because normally when markets do lose 20%, it's pretty much done and dusted, and it's time to move on. And this has been the case in America. as you know, America leads the world.
Yeah. So from that point of view, what's the bit between a bear and a bull, Toby, or isn't the one?
The good questions.
We've yet to find a suitable animal for that one. So the next question is: are we about to enter a recession?
I think in the UK, that's probably likely. We've got this kind of stagflation where you get a stagnant economy and inflation not quite run away, but it's 9%, close to double figures. So that's a pretty rotten state of affairs. Again, you also have to hark back to America, who lead the way and everything. And over there, I think we're not likely to get back-to-back quarters of negative economic growth, which is the definition. So I think the States will just get out of it. Bond markets had been assuming that a recession was coming, but you see the payroll figures that came out of the States on Friday. They're stronger than expected, and pretty much everywhere you've got a shortage of labor, and you don't typically get recessions when the job market is hot, and that's what it is at the moment. So you get those old definitions cropping up. One thing I think we're learning from the last 6 months is that the old patterns that used to work are just not working. I mean, in some ways, investing and managing money now is incredibly hard because you haven't really got something to fall back on or to compare it with in your own lifetime. And even dipping into history books, there's very different backdrops going on with the way money is created, or what sort of like gold standards were going on at the time. So comparing to the past is apples and pears at the moment.
Yeah, because going back a few years to recessions in the past, you normally associate those with high unemployment, don't you?
Exactly.
Yeah, which we're not seeing here.
That's
you
right,
normally, with the inflation side, see the Bank of England base rate a lot closer to the inflation rate than it is at the present time. So that's two factors that are different.
That's right. And it could be an intended move because debt levels are back to where they were pretty much World War II, which is like multiples of the economy itself. So what one option is to allow inflation to run higher than interest rates or bond yields, which is long-term interest rates, to effectively whittle away or devalue debt over the long term. It also devalues savings as well at the same time. But ultimately, governments are in a business of self-survival, and getting rid of debt is the best way, because they've basically got a massive mortgage effect. So a small change in rates can add a big expense to the interest costs each year. And what governments do is that they don't pay off debt; they just keep rolling it forward, and also the interest itself. So you just get a snowball of debt on debt, and that's how we got to where we are now.
But they love inflation, don't they? If they're honest, you can inflate yourself out of a situation.
Yeah, that's right. But at the same time, you're devaluing your currency as well. So it's a slippery path.
Oh yeah,
you go down that road. You've seen lots of pretty hideous examples in the past where this has occurred. So it's a real tightrope at the best of times.
I seem to remember back in the 60s, Harold Wilson and his announcement on devalue, but of course he said it won't affect the pound in your pocket.
That's right. It's still there, it just doesn't buy as much.
That's right, absolutely.
Yeah, there's lots of euphemisms in the past to be resurrected for what's to come. No doubt.
It's interesting, though, that inflation isn't just restricted to the UK or Europe. It's become a worldwide phenomenon over the last year or so. And what do you put it down to, essentially? Is it the price of oil and stuff like that?
It is. That really is the root of it. So, the oil prices were going up anyway from a very low, in fact, a negative base a couple of years ago. So the year-on-year changes were pretty strong anyway. So what we really need is a period of flat oil prices for that percentage change to fall out the 1 year sort of change in price levels. And we've already seen crude come off about 20% so far in the last couple of months. Last week we had UK natural gas prices down 20%, and unfortunately they went end up with cheaper bills for you, for thee and me. They'll be hoovered up. So yeah, energy is the core of it, and on top of that, there's this kind of cult of green and climate change that won't allow a natural transition. It's trying to force or cancel fossil fuels, and this has led to disaster. I'm sure we'll probably talk about Sri Lanka later, but you can't just steamroll these things through and not expect consequences. And the same applies to food. Food and energy prices are the basis of living, really, and people will revolt eventually.
It's interesting because in my view, going green has got a high cost. There's no doubt about that. So one wonders quite how energy prices will significantly reduce. There's a bit of a vested interest there to keep them high to pay for the decarbonisation.
That's right. It's again, you could have a separate conversation on the science behind reducing climate down to one element of carbon, and some of the rather exaggerated data that's come out in the past and the way surveys are conducted. That I mustn't veer off the market point here, but investment firms are driving this agenda for green energy and ESG, and it comes at a price. And if it forces markets down and food prices up, the price might be too much to pay.
Yeah. So we'll have to watch that carefully. Do you think the Bank of England will be putting the interest rates up significantly over the next 12 months?
Not compared with America, I don't think. No. They had the biggest rate rise last month since 1994, and they're really going for it, and they'll have another rate rise this month. I think the UK is just in too precarious a position to do that at the moment. With obviously we'll talk about leadership stuff later perhaps, but it's just too vulnerable at the moment to put up rates on top of everything else. Whereas in the States, I think that there's more scope for higher rates because they're leading the world.
As ever. Right, let's see now. I was very pleased to see they're going to reinstate the triple lock properly, but that's going to cost an arm and a leg, isn't it?
That's right. All these candidates for leadership are promising tax cuts as well. So don't know where the money is going to come from. So this is a case of either the wage rate, CPI, or 2.5% is whichever's the top one out of those. For old age pensions, that's great. Perhaps the younger people will say, well, hang on, we can't afford houses. You're sitting on this property equity, and we're funding, less of us are funding more of you effectively. So again, there might be some intergenerational strife going on.
Well, I think it could well, because my view, being totally selfish, is I've paid my contributions. I want my pension. That's right. If you as a government are stupid enough to come up with a formula that gives you those three options and you get the best one of the three, I think most people are going to say, yes, please.
I think to take it while you can, because it is effectively a Ponzi scheme where the money isn't there and people paying in is the money's going straight out again. So it all points to money printing in future or some kind of crisis. But these things, or it's like locally in politics, stuff gets kicked down the road again and again until something breaks.
It's a 5-year view always, isn't it? Maximum based on the next election.
So this is why dictators have so much strength, because they can plan for 5 and 10 years. And
or in China's case, probably 100.
Yes, or 15 years.
Now, last week, the Prime Minister Boris Johnson was forced to resign. And it was quite interesting listening to the news at that time, the rolling news, because they were all saying, better get somebody in place for tomorrow, otherwise the markets are going to absolutely crash. Do you think that would have happened?
I think it is important to get this done quickly, because ultimately a contest is about competing and sort of mudslinging as well. So if you have that on top of what's gone on in the past, it's going to really damage the public's faith in government. I think that what I've heard is that the 1922 committee are going to really push through the contest and get it down to 2 by the 21st of July. So
that's right.
In 10 days, it's going to really get steamrolled through. So that's good.
But better just make the point to the viewers that we've actually recorded this on the 11th of July. So anything that happens in the meantime,
don't blame us.
But they were saying the 22 committee is probably likely to sort of change the rules to the point where they're going to knock a whole load of people out in the first round. By insisting you've got to have 20 signatures or more than 20 signatures. This sort of thing.
That's right. Yeah, they'll be realistic and get this done. The longer it goes on, the worse. The worse it'll be. And obviously the pound's been struggling on the back of that as well. Yeah.
I was going to mention that. I mean, it has taken a bit of a hit. Not so much on the euro though.
Yeah, I mean, it's a case of two stragglers.
Yes, absolutely.
Dragging them.
Because I mean, obviously, as far as the dollar's concerned, I can remember a time when many years ago when they thought it might reach parity with the pound. Still quite a way off that.
Yeah, there's time in the 70s, I think, where we had the World Bank bailout. I don't think it's going to get quite as bad as that. I mean, below 120 is pretty poor. But there needs to be a real major bust up globally for yet more money to head towards the dollar. But I think most of that has been spent now. I'm not saying pound's going to rally anytime soon, but I think the worst is baked into the price.
Because with the euro, of course, basically it's German currency, isn't it?
Yeah,
or has been in the past.
They're the ones who are struggling with stagflation as well, with no growth and extraordinary high inflation by European standards. And there's not much you can do because as we discussed before, they import so much energy. It's an imported problem. What can you do about it? So this might create some kind of realpolitik with relations to Russia, for example. I think that might be it might have to be some work done there to maybe rebuild relations, or because you just can't go on. I think the American approach is fight to the last Ukrainian. So many poor blighters who can keep on,
But
keep at
it doesn't say much for Angela Merkel's legacy, does it? Because in order to stay in government, a few elections back, she agreed with the Greens that they'd scrap nuclear.
Exactly. Yeah.
It's crazy.
It's this ideology that in the face of fact that it's kind of agenda that is kind of shaming and pushing Western leaders to the brink. And you just can't govern a country by the wishes of a small percentage of people.
Certainly the tail wagging the dog, isn't it?
I know they're very vocal, but the public has a say in a vote too. We sort of looked at commodities in terms of wheat, sunflower oil. A lot of the stuff comes from Ukraine, and that's obviously going to not get cheaper anytime soon, is it? Well, wheat just recently has really been taking a hit. I noticed when I was in France a couple of weeks ago that a lot of the crops are very different from usual. Like near me is a lot of rapeseed and wheat being grown, and the price is reflecting that. They're pretty good harvests with the weather. So these commodities do change. Pretty soft commodities can turn around very quickly because farmers are so agile. Planting crops. So that's good to see. Again, it's whether that a change at the wholesale level comes through to you and me again.
In time.
It's very frustrating to see. So you might get governments dabbling with price controls like they did in the past, which has all sorts of unintended consequences.
Don't, please. It never works. It never works. No. But there we are. Gold and silver, presumably they've done reasonably well with the amount of uncertainty floating around.
They've been disappointing, particularly silver.
Right.
Even though the thing is, it's been masked because gold and silver priced in dollars. So if you put your pounds in there, you kind of ended up relatively stable. But the actual gold and silver prices have really struggled, literally last week as well. Still got a lot of inflation around. They're just not doing what they're supposed to do, really.
Well, we've always thought of them as being safe havens, haven't we?
exactly, particularly in either political crisis or inflation. I think looking at the last couple of years, I think the gold price in particular is very good at forecasting future inflation. So you get these sudden bursts of upward movement ahead of the event, then they go flat, and then so maybe it's a forecasting of a slowdown to come. So everything's been disappointing. Nothing's gone up, at least in 2020 and 2008. Government bond prices shot up as stock markets fell. This time around, everything's gone. It's a complete domino effect, which I've personally not seen before, and it's tough on clients to explain that. Nothing to cling to. There's no.
Well,
no
that's right. That's right. Well, that's the point. Can we just have a quick chat about Sri Lanka? How did it come about?
Okay. Well, on the face of it, what the news is saying is that it's an economic crisis, and that is part of it, like a debt crisis, where you often Asian countries issue bonds in US dollars. So because interest rates are much lower than their own country, they think they're borrowing for very cheap levels. But it always comes back to haunt you, because strong currencies are that for a reason, or hard currencies, as I know. So when your local currency falls badly, your debt shoots up in value, and it becomes a crushing weight. But if you've got to unpeel the layers here, because the public in Sri Lanka have called the president, they say he's guilty of what's called green madness, going back to this point. So he was lauded at the Glasgow's COP26 conference last November as being a role model for green progress. So he said Sri Lanka has to be organic, and so the farmers apparently weren't allowed to use fertilizers or herbicides. And this, of course, for a country that imports a lot, has been an absolute disaster. So people have been hit by shortages, food and energy price rises, and you've got the economic problems as well. So it's a whole combination of things all coming home. And you've seen the news of people sort of invading the president's residence and swimming in his swimming pool. And it's a salutary warning for Western governments as well, that you push people too far and they're starving and can't afford fuel, then this is all you can do. It's like bees in a hive. It just, you overheat it and they get going and
they swarm. Yeah,
exactly.
Because I know they've had problems in Sri Lanka in the past with the Tamils, etc., etc. But that seemed to have sort of resolved itself, much in the same way as we hope Northern Ireland has resolved itself in terms of violence and stuff like that. So you think of Sri Lanka as being quite an advanced country, and if it can happen to Sri Lanka, as you say.
Yeah, I think there's an American journalist, I can't remember his name offhand, but there's a quote in 1906 that mankind is 9 meals from anarchy. I think it's the phrase.
Yeah.
And people say it's 6 meals nowadays, but that is very much the case. And revolutions, like we had the Arab Spring of 2011, it's always food shortages in the summer. Again, a bit like the bees analogy. Yeah, and it all kicks off.
Yeah, that sounds a bit like a PJ O'Rourke quote. He was quite good at things like that. I suppose, once again with Sri Lanka, they must have lost out a lot on their tourism business as well because of COVID. And that
of course now got the World Bank.
Yeah.
So the World Bank is going to be called in, and I think that's going to be a recipe for disaster, because they have a standard Western blueprint of privatization and austerity, and it's just, what's that going to do to the country? So it might look good on the surface or work in some countries, but it's often a disaster. And often you get Western banks and investors piling in and buying the country's national treasures, effectively.
But I was listening to a program this morning, and they said if the World Bank do condescend to provide some money, it's not going to happen in days or weeks, quite often months before it actually hits the target. And from what I can gather, they're totally on their knees. Yeah. But there you go. It's a worrying situation. What about world aviation? Let's depress ourselves further by talking about all these cancelled flights everywhere.
It's like Alderney gone global,
Yes, absolutely.
Sorry.
They call it the Alderney factor.
Exactly. No.
He didn't mean it, folks.
No.
But it must be of concern because, obviously airlines rely on revenue generated by filling planes. And if you get a situation where you've got to knock out thousands of flights during the holiday season, how does that sort of end up?
It's not good. A lot of this, again, you've got to peel back layers. And what you find is a lot of the travel industry has a big component of private equity.
Yeah.
And in the past, when things are ticking away, you can slash costs and pay very low wages. But when that reverses, there's no. Part of the issue with private equity is that there's no meat on the bone. There's no buffer. It's every part of the chain is financialized.
Yeah.
So when you get something like this happening, there's no give. There's no ability in the structure to compensate and build that capacity quickly. It's just not there. So it's going to be a tough summer, and people have been dying to get away and are being punished again for even when they've booked flights and they've done everything right.
Seen that several companies recently have been talking about buying their shares back, Aviva and BP being two examples. What's the rationale for that?
Okay, it's pretty straightforward. A company is judged statistically on earnings per share.
Yeah.
So what the company does, if it buys back its own shares, it kind of reduces the number of shares available.
Gotcha. Yeah.
So the same earnings is spread between fewer shares, and it's a way of really boosting. It's not manipulating the figures, but it's making them look good. And often there's a conflict of interest, like all of these things. So in America, you have and elsewhere, you have these share options where directors, they're not necessarily paid massive sums, but they are given these the ability to buy shares at a cheap price compared to the future. So the conflict is that you're driven to really pump up the earnings in the short term and do whatever it takes to hit your share price target, and you walk away a multimillionaire. And these options were designed for internet startups many years ago, and they've now sort of moved into sort of banking and any big industry. Most large American companies have it. So this drive to push up earnings at any price effectively is at the root of a lot of short-termism. And again, talk about the airlines. This is a good case in point where you'll do anything to get the share price up, and you've kind of the stakeholders are put to one side in this. And it's like when the tide goes out, all is revealed.
Yes, that's right. Now, obviously, we've been going through this rather rough time with the markets. How do you manage the thing when it's in free fall?
It's extremely difficult. I was writing on my commentary going out this week to our clients, saying that the only place to have been at the beginning of the year was in US dollar cash and oil futures. And if any sort of low risk, medium risk client, you can't. It's not something you can
wipes them out for a start, doesn't it?
Yes, right. Back in the beginning of the year, US market was at record high, had inflation going up, so cash was the last thing you'd go to. So all kind of logic has been flipped. So for me personally, it's been a struggle trying to find, as mentioned before, some kind of analogy or something to work off, because in the past when interest rates go up, stock markets do very well. It's kind of a paradox. And obviously this hasn't happened. So it's been someone who's reasonably well read on history and financial history. This has been a tough one because you're dealing with people's pensions and something they've saved years for, and you're looking at double-digit loss pretty much anyway you look.
But
most clients.
But it's not a loss until it crystallizes.
Yeah, I mean, in the past, I'd said that was often bad advice because people hang on to bad shares or bad investments for years, and they drift away and keep on losing money. This is one of those times, a bit like in March 2020. I've got to sit in your hands and just ride it out.
Yeah.
And the painful thing is it's a bit like, when you lose money, it's like going down the lift. It's straight down, and then you've got to sort of climb the stairs afterwards. So the ratio of time recovering to the time of losing is quite big, unfortunately.
Yeah, but if you look at 2008, it did start recovering fairly quickly, didn't it?
Yeah, and same with 2020. It's like it's a V shape.
Down,
fairly quick recovery. This time, I think it would be misleading to tell people that we're going to get a sharp turnaround, given that the interest rates are going up and central banks aren't printing money as much as they were. They'll probably go back to that, but for now the mood isn't there to keep printing money. So it's these things are normally, you say, history rhymes but doesn't repeat. This time around it's very different from what I've experienced, for sure.
Just a couple of what should we describe them as? Novelty items.
Okay.
And that
pick and mix.
For pick and mix with Tesco, Kraft, Heinz and Mars. Now Tesco have come to a settlement with Kraft apparently, and Heinz recently over this question of pricing. It's quite incredible, isn't it, the power of the supermarket?
It is. There's some. I was surprised that actually there's some on the other side as well, and that they wouldn't let. There's some like negotiation between what price the supermarkets are allowed to sell by the supplier, which I was surprised at as well. But on the whole, you think supermarkets always have the upper hand. So it's interesting seeing that battle going on, where you have some empty shelves and lack of product that might push people to go to another supermarket. So it's more even-handed than I used to think personally. Another aspect of some of these brands is that the Americans, are not being anti-American or anything.
No.
When they take over something like Cadbury's, I think with Heinz as well, the kind of the quality change and the taste changes.
Yeah. And
there's definitely something which is lost there. So people have been switching to Branson, for example, as a product line for beans, because Heinz is just the same. So there's price on the one hand, there's quality on the other. So when I went shopping the other day for my usual bag of chilies, which has 4 chilies in it,
plus the caviar.
Oh yeah, that's right. I don't want to mention it.
You got 3 instead of 4.
Yeah, that shrinkflation is back again. So speaking of Mars, these are not the size I had as a kid.
This is
some
true.
Size is
this
the
is
new
true. Yeah. But Mars is a classic example of a private company that calls the shots.
Yeah.
And it's not just Mars bars, is it? It's cat's food, pet food, and everything.
Yes. Good point.
I don't know whether it's still called Uncle Ben, but it used to be called Uncle Ben's Rice, and they're into a lot of things from that point.
Yeah, I think some objection to the name. So
yeah. They could have called it Uncle Tony's Rice. I wouldn't have minded if I got a penny a pack out of it or something like that. Finally, Lurpak butter security seals.
I know it's apparently I think M&S also putting security on steaks as well. So it's all going on. I just can't imagine there's a square-shaped lump in the shoplifter's pocket.
Yes, absolutely. And suddenly you go through the door and you bleep, 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 bleep. There we are.
Hand over your butter. I mean, this is why I'm so pleased in the Channel Islands we have our own dairy herds. I know that the farmers struggle here with the capacity for having enough land, but it's great we can keep our own milk and butter.
And I have to say, Alderney butter is the best in the world. So
of course, it is lovely. Yeah, when I came to see you last time, it's
absolutely.
Long may it last. I have childhood memories of my house in France, seeing the French family, the farmers used to live there. Their grandmother would be churning butter in the barrel. That was just incredible. Apparently, you can make butter quite easily, I'm told, but I haven't tried myself.
Well, when you're over there for that break, you'll have to have a go. Toby.
Chase the cow.
As ever, it's been a great pleasure. Good to see you. Thank you so much for sparing us some time. And we'll be back in September if the world's still here.
Bit of positive news. God willing.
October, actually, isn't it? the end of the quarter. But there we are. Thanks, Toby.
Thanks, Tony.
Cheers for now. Bye.
Yes, bye-bye.